Good morning, welcome to the ADS Securities Markets Update. The US dollar failed to close the week, or last week, above its resistance area, which stands at 97.50, and this is especially the cause because of the US economic releases, which came in with a notable disappointment, increasing the chances for a downside revision in Q2 GDP estimates in the coming days. Beginning with the new home sales, which basically came in with two negative surprises. The first one is basically that June's reading came in with a negative surprise, or declined by the most since March of this year, falling by 6.8%, while it had been anticipated to rise by at least by 0.3%. But what's more surprising and disappointing at the same time is that May's reading has been revised 150% lower from a rise of 2.2% to a decline of 1.1%. This put also the new home sales at the lowest level since December of last year, posting the second monthly decline in a row, and also a pattern we have not seen since the middle of last year. Another surprise came in on Friday from the Federal Reserve when it published the year-end staff projections for the next 5 years. The Federal Reserve also announced after that it was published by mistake and that it fails to reflect the policymakers' actual view. And also the Federal Reserve insisted that these are only the projections of the Federal Reserve staff. The main reason behind the US dollar decline on Friday was the Federal Reserve staff inflation projections for the next 5 years. The publication shows that the Fed sees the PCE price index, or the inflation, or the preferred inflation index for the Federal Reserve, below 2% target at least until 2020. Moreover, they cut the growth and the Federal Reserve or the Fed fund projections as well. This publication has confused the market a little bit because in the latest FOMC statement, the meeting minutes, and even Janet Yellen testimony all shows that inflation is likely to pick up very soon and this year. And if the Federal Reserve projection is below the 2% target for the next 5 years, the question remains right now is why would the Federal Reserve be enforcing the rate hike estimates this year? West Texas crude and Brent crude also have entered a new bear market last week. WTI West Texas crude closed the Friday lower by 23.75% from April's high, and also Brent closed lower with more than 22.02% from May's high. And this also increased the chances for further decline in the U.S. outlook, or in the U.S. year-over-year CPI and West Texas crude oil. And the positive correlation also between the West Texas crude and the U.S. CPI, or year-over-year CPI, is at the highest level since 2009. And in short, the U.S. CPI and the core CPI are set to face more declines in the coming months, which also weaken the chances for a sooner rate hike by the Federal Reserve. In addition to that, we maintain our neutral outlook toward September's rate hike as we wait for further evidences. The US dollar also closed last week lower and lost around 1% last week, and closed over 1.3% throughout the week. And there are also two levels to watch for this week ahead. On the upside view, first of all, we have to watch the 97.50, which basically the index failed to break above it last week, and it represents a very solid resistance area. And this index also, and if the index failed, or the index basically failed to break above that level. And however, a break above that resistance would clear the way for further gains again toward the most important resistance for the week, which basically 98.60, because it represents its also the downtrend line from also since March of this year until today. On the downside view, the index also facing a strong support area, which stand at 96.50, which represents two levels: the upside, or the daily uptrend line, in addition to 100-day moving average. And the catalyst for a break above or below these levels would be the fundamentals from the US this week, including the durable goods data today, the services PMI, consumer confidence, the Richmond Fed, FOMC also decision this week, GDP and inflation data, and we are also again ahead of an interesting week. As for today, there are also few economic figures will be released this weekend today from Europe and the US. However, these figures are likely to have a notable impact on the markets. In Europe, we wait for the IFO Business Climate from Germany, which is set to rise slightly toward 107.6, up from 107.4. And in the US, or the major announcement will be from the US as we wait for durable goods data, which is set to rise by 3.2% after declining by 2.2% last month, while the core durable goods may rise by 0.4% after no change last month. Any disappointing reading today will weaken the Federal Reserve outlook again for a rate hike in September, and therefore the US dollar may lose more grounds. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube, to get the latest economic releases, reports, and analysis. Thank you for watching, and have a good week ahead.